Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is the FX rundown. Now, the dollar is sort of quiet today, but overnight we did hear news jawboning the potential trade deal between the U.S. and China. This was expected, and now it's playing into the market a little bit, but equity markets and the risk sentiment didn't really run too much from where we saw it overnight in that little bit of a jump. Now, the dollar just quiet, and we believe there are quite a bit of safe haven tailwinds in the dollar, despite the fact that the dollar is a little bit weaker following the Fed policy meeting last week. Overall, though, we did see Fed Chair Powell yesterday, and then St. Louis Fed President James Bullard followed that up in a less dovish tone. So the dollar did bounce back a bit, but it has stayed contained. And we're talking about the dollar index. There is some resistance, 96 to 96 and a quarter. That's what you want to watch going into tomorrow. And tomorrow we get the final Q1 GDP numbers, so keep an eye on that. It's expected to be at 3.1%. We've already had 2 revisions, so not really expected to see it move too much. In the early part of the morning, too, we get Eurozone consumer climate data and some of those climate expectations. Now, this comes after a lot of the data regionally we've seen throughout the month, so it's not a big number, but you do want to keep a pulse on it. Now, for the euro, we're seeing it remain elevated. It's staying above the 100-day moving average, above 114, and we had that support right around 114.10, 114.30, and it's remained very constructive out above there, the same way that the dollar index has remained contained below 96, 96 and a quarter. And ultimately, the path of least resistance for the dollar remains lower when it's below there, and for the euro, higher when it's above there. Now, for the yen, we are seeing the safe haven markets come in a bit. Treasuries are lower. Gold is seeing a little bit of a hit to the chin. What we are seeing, though, is the yen. There is some construction, though, in the sense it is a bad day. Don't get us wrong. It's a bad day, but it is right into a major 3-star support pocket. What we do want to adjust is from our FX rundown on Monday, we are adjusting the major 3-star support level just a little bit lower, more closely aligned with 93.13 area, 93.30. That's where there is a trend line from the recent lows about 2 months back. So you're going to have some good support there, and really just holding the law of round numbers, 93 is coming close to that as well. So watch the yen as it trades into 93, and we would want to see it respond from that area. But again, what we're seeing is positive news in the U.S. and China trade front, keeping some risk assets higher, and that's hurt the yen as well as it's hurt treasuries and gold here today so far. But again, we think when it's all said and done, the dollar is going to weaken after, or if we get a U.S. and China trade deal, and that will be a surprise to I think a lot of people when we see that happen. So keep an eye on that. Now, lastly, the commodity currencies, we're seeing the Aussie dollar tethered to 70. Not a whole lot of news, but it has benefited on that positive jawboning on U.S. and China trade. Stayed nimble there. Overall, it's starting to just hold ground well and shaking off such negative activity we've seen through June. Now, with the Canadian dollar, very strong session. Path of least resistance remains higher. It's out above the 200-day moving average. We talked about this on Monday, and out above there, that path of least resistance remains higher. The one thing about the Canadian you want to watch is each time over the past year it's been out above that 200. It's only been 3 or 4 sessions. This is adding sessions on here, so it's about 4 or 5 sessions now out above that 200-day moving average. And again, that's favorable. You're seeing crude oil a touch near $60 today, and that's helping the path of least resistance as well. So keep an eye on things, but at this point, after today's move in the Canadian, you don't want to really start chasing it. You want that to come back in, maybe look to test a little bit lower. We'll see where some of the support levels come in tomorrow after this thing extends gains, probably overnight just a little bit more. Give us a call. We're here to talk about anything on the board, 312-278-0500. You can email us info@bluelinefutures.com. Check our website for updates. You sign up for a free trial of our research there. But remember, futures trading involves substantial risk of loss. It's not suitable for all investors. Thanks a lot.